If you receive Old Age Security or Canada Pension Plan payments, this July matters more than many seniors realize. There is an OAS change coming, there is a clawback issue that can quietly reduce what some people get, and there is also a big misunderstanding about CPP that could leave many retirees disappointed when they check their bank accounts. Most seniors have not been clearly told what these July changes actually mean in dollars and cents, and that is exactly what we need to talk about today. On the surface, the headline sounds positive because old age security is set to rise again for the July to September quarter. That adjustment happens because OAS is reviewed every January, April, July, and October to reflect inflation. But here is what most seniors are not being told. An increase on paper does not always mean more money in your pocket, especially if taxes, clawbacks, or income-based deductions are involved. For seniors aged 65 to 74, the maximum monthly OAS amount for the April to June quarter has been $743.05. With a 1.2% increase for July to September, that works out to roughly $751.97 a month. For seniors aged 75 and older, the maximum amount has been $817.36, and a 1.2% increase brings that to about $827.17. So yes, there is an increase, but it is modest. If you are looking at those numbers and thinking, that does not sound like much, you are not wrong. For a senior aged 65 to 74, the increase is roughly $8.92 a month. For a senior aged 75 and older, it is roughly $9.81 a month. That is helpful, but in today's economy, it may not even cover one extra grocery trip, a higher prescription cost, or a jump in utility bills. This is where the story becomes more serious. Many people assume that because OAS is going up in July, CPP must be going up too. That is not how the system works. OAS is reviewed quarterly, but CPP retirement pensions are generally adjusted annually, not every 3 months. So many seniors will see a slightly larger OAS amount this July, while their CPP stays exactly the same. That difference matters more than it sounds. If your household depends on both OAS and CPP, you may be expecting your whole retirement income to get an inflation lift. Instead, what you may actually see is a very small increase on one benefit and no mid-year increase on the other. Most people focus on the increase but miss this entirely, and that is why July could feel disappointing even when the government says payments are rising. Let's put that into a simple example. Imagine you receive about $700 in OAS and about $900 in CPP each month. A 1.2% OAS increase adds only around $8.40 to the OAS side of your income, while the CPP amount does not move in July. So your total monthly retirement income rises by less than $10, even though food, housing, insurance, and transportation costs may have increased by much more than that. Now we need to talk about the part that causes the most confusion and, for some seniors, the most frustration. July is also when a new OAS recovery tax period begins. Many people know this by another name, the OAS clawback. If your income was high enough in the prior tax year, part of your OAS can be reduced or even fully recovered through monthly deductions starting in July. For the July 2026 to June 2027 recovery period, the key income year is 2025. That means what matters is not what you are earning right this minute in June or July of 2026, but what your net income was on your 2025 tax return. If that 2025 income was above the threshold, your OAS can be reduced beginning this July, even if your income has already fallen this year. The recovery threshold for the new period is $93,454. Once a senior's net income goes above that amount, the government calculates a repayment equal to 15% of the excess, and that repayment is usually spread across monthly OAS payments. In simple terms, the more your income went above the threshold, the more likely it is that your monthly OAS deposit will be reduced starting in July. This is the part that surprised even financial advisors the first time they had to explain it to clients. A senior can hear that OAS is increasing in July and still end up with a smaller deposit than before. That is because the small quarterly increase and the much larger clawback deduction are two different things happening at the same time. One pushes your payment up a little, and the other can pull it down a lot. Here is a very realistic example. Suppose a 74-year-old senior had net income of $98,000 in 2025. That is $4,546 above the clawback threshold of $93,454. 15% of that excess is $681.90 for the year, which works out to about $56.83 a month being deducted from OAS during the July 2026 to June 2027 period. Now compare that monthly clawback to the July OAS increase. If that senior is 65 to 74, the quarterly inflation increase is only about $8.92 a month. But the clawback deduction in this example is about $56.83 a month. That means the senior could still see their OAS deposit drop by roughly $47.91 per month, even though the official OAS rate itself went up. And this next part is where it gets complicated. The clawback does not hit every senior the same way. Some people are nowhere near the threshold and will simply receive the July OAS increase. Others are close to the threshold and may lose only a small portion of OAS. And higher income seniors can see most or even all of their OAS recovered, depending on how far above the threshold their income went. There is also an age difference many viewers overlook. Seniors age 75 and over receive a higher base OAS amount than those aged 65 to 74 because of the 10% increase that begins after age 75. That sounds like straightforward good news. But the catch is that a higher benefit amount can also mean there is more OAS available to be clawed back if income rises enough. So being older can mean a larger check, but it does not protect you from recovery tax. Another important point is that OAS itself has a safeguard many people do not know about. While OAS is reviewed quarterly based on inflation, the payment rate does not go down simply because inflation cools off. In other words, the official OAS maximum does not decrease just because prices stop rising quickly. But here is what most seniors are not being told. Your personal deposit can still go down because of clawbacks, tax issues, overpayments, or changes to income-tested supplements. That brings us to the first of 3 real-life senior profiles. Imagine Margaret, a 71-year-old widow in Ontario. She rents an apartment, lives carefully, and relies mostly on OAS plus a modest CPP retirement pension. Her CPP is about $620 a month, and her OAS has been close to the maximum for her age group. For Margaret, the July story is mostly simple but still important. Her OAS could rise by about $8.92 a month if she is receiving the full amount for a senior age 65 to 74. Her CPP, however, likely does not rise in July, so her total monthly retirement income only improves a little. That is welcome, but it is not enough to change her budget in any meaningful way. Margaret is also a good example of why headlines can be misleading. If she hears that benefits are going up, she may expect broader relief. But once her rent, groceries, phone bill, and insurance renewals are factored in, that extra amount may disappear immediately. For seniors in her position, the bad news is not that OAS is being cut, but that the increase is too small to keep pace with the real pressure on a fixed income. Now consider the second profile, Dennis, a 68-year-old retired tradesperson in Alberta. Dennis receives OAS and a stronger CPP pension because he contributed for many years, and he also makes occasional withdrawals from a modest RRSP to cover home repairs, vehicle costs, and travel to see family. On paper, he looks more comfortable than Margaret, but his July risk is different. Dennis may welcome the OAS increase just like everyone else, but he also needs to think one step ahead. If his 2025 income stayed below the clawback threshold, July may pass without any OAS deduction. But if he took a larger RRSP withdrawal in 2025, sold an investment, or realized a taxable capital gain, he may be much closer to the line than he thinks. Most people focus on salary and pension income, but miss how withdrawals and gains can quietly push them into clawback territory. This matters because many retirees believe the clawback only hits wealthy seniors. That is not always true in the way people imagine. A senior does not need to be rich in a lifestyle sense to cross the threshold. A one-time event, such as selling a cottage share, cashing in investments, or making a larger RRIF or RRSP withdrawal, can temporarily lift income enough to trigger an OAS reduction the following July. Now let's look at the third profile, Helen, a 74-year-old in British Columbia who is close to the clawback threshold. Helen has OAS CPP, a small workplace pension, and some investment income. She is not lavishly well off, but she is careful, owns her condo, and has tried to make smart financial decisions. The problem is that one strong income year can create a surprise a full year later. If Helen's 2025 net income came in at $94,500, she would only be $1,046 above the threshold. That may not sound dramatic, but the OAS recovery tax would still apply. 15% of $1,046 is about $156.90 for the year, or roughly $13.08 a month. So even though her OAS rate goes up in July, part of that increase could be erased by the new deduction. If Helen's 2025 income was higher, say $98,000, the impact becomes much more noticeable. As we mentioned earlier, that could mean around $56.83 a month in clawback deductions. In that case, the July OAS increase would do little to offset the reduction. And this is exactly why seniors near the threshold should never assume a government increase means a bigger net deposit. There is another layer to this that many households miss. The clawback is based on individual net income, not family feelings about who is struggling more or less. A couple may think of themselves as middle class and still be affected if one spouse has enough taxable income individually. That is why July can produce awkward surprises even in households that do not see themselves as high earners. It is also worth noting that full OAS recovery does not happen the moment you cross the threshold. For the July 2026 to June 2027 period, full repayment generally occurs at much higher income levels, around $152,062 for seniors aged 65 to 74 and around $157,923 for seniors aged 75 and over. So there is a wide range where only part of OAS is clawed back. But even a partial clawback can matter a great deal when every monthly dollar counts. So what is the silver lining here? First, OAS is in fact increasing for the July to September quarter, and for seniors with lower incomes, that increase should come through without any clawback deduction. Second, the clawback threshold itself is higher than before, which means some seniors who might have been affected under a lower threshold may avoid it this time. But the catch is that many retirees do not know where their 2025 net income actually landed until the deduction starts showing up. And there is one more misunderstanding that catches people every year. Some seniors think a drop in their July deposit must be an error because they did not apply for any change. In reality, the July change may be automatic and tied to tax information already on file. Service Canada and the CRA do not need a senior to request a clawback adjustment for it to happen. If the income supports it, the deduction can be built right into the payment cycle. That is why checking your My Service Canada account right now is one of the smartest moves you can make. Look for your current benefit details, review any correspondence, and compare what you expected to what is actually scheduled. If you have access to your 2025 tax information, line up those numbers with the clawback threshold. This is the part that can save you from being blindsided when the July payment arrives. If you are unsure whether your income puts you at risk, do not guess. Pull out your latest tax return and look at your net income, not just your pension amount. Include pension income, RRSP or RRIF withdrawals, investment income, and any other taxable amounts that may have pushed you higher than expected. Many seniors underestimate this because they remember what came into their bank account, not what ended up on their tax return. You should also pay attention to timing. The July benefit payment date for both OAS and CPP is scheduled for July 29th. That means you do not have much time to understand what may be coming. If you wait until the payment lands and then start asking questions, you may already be dealing with a reduced deposit, a missed bill payment, or unnecessary stress. If something does not look right, contact Service Canada as soon as possible. Ask whether your OAS amount changed because of the quarterly rate increase, a recovery tax deduction, a supplement issue, or an overpayment adjustment. Be specific when you call. Do not simply ask why the check changed. Ask what part of the payment changed, what income year was used, and whether the reduction is temporary or expected to continue through the full July to June recovery period. For seniors with income close to the clawback line, this is also a good time to speak with a licensed Canadian financial advisor or tax professional. That is especially true if you are planning RRIF withdrawals, selling investments, or taking a lump sum later this year. Remember, the July 2026 adjustment is based on 2025 income, but what you do in 2026 could affect the next recovery period starting in July 2027. One smart decision now can protect future payments. Another practical step is to stop looking only at the gross benefit headline and start looking at your net monthly cash flow. An OAS increase of less than $10 may sound positive, but if property taxes, condo fees, prescription costs, and food bills are all rising faster, your real financial position may still be weaker. Most seniors are not imagining that squeeze. The math simply is not as generous as the headlines make it sound. And if you are helping a parent, spouse, or older relative manage benefits, do not assume they understand all of this just because they have been retired for years. The OAS and CPP systems are familiar, but the details can still be confusing. A senior may know they receive the payments every month and still have no idea why one amount changed while the other did not. That confusion is exactly what makes July such an important month to watch. So let's bring all of this together. Starting this July, OAS is set to increase by 1.2%, which means roughly $8.92 more per month for seniors aged 65 to 74 at the maximum rate, and roughly $9.81 more for seniors aged 75 and over at the maximum rate. But CPP generally does not get a mid-year increase, so many households will see only a very modest change overall. And for seniors whose 2025 income crossed the new $93,454 clawback threshold, OAS deductions can begin or continue in July, reducing the actual amount deposited. That is the bad news in plain language. The increase is real, but it is small. The clawback threshold is higher, but many seniors can still be caught by it. And the biggest mistake people make is assuming that because one part of the retirement system is rising, the rest of their income must be rising too. But here is what most seniors are not being told. The official rate and your actual bank deposit are not always the same thing. Before July arrives, check your My Service Canada account, review your 2025 tax return, watch for any letters about benefit adjustments, and be honest about whether your income may be near the clawback range. If you are unsure, contact Service Canada or speak with a licensed Canadian financial advisor to verify your exact situation. Rules, thresholds, and personal tax details can affect every senior differently, so it is always wise to confirm your benefit information directly. If your OAS or CPP payment has changed, or if you are worried it might change this July, leave a comment and let others know what you are seeing. Share this with another Canadian senior who may not realize how these July adjustments work. And subscribe for more clear, practical updates on Canadian senior benefits, retirement income, and the financial news that matters most to you.